the NASDAQ. So I'm going to compare, we're getting after hours trading here, which I didn't know if that was going to happen. But we're going to get a bar today just off market, and then the stock market's closed tomorrow. So the next actual day will be Tuesday. But I want to compare this 2018 crash to this crash that we're having right now, because they are way more related than people think. And I'll show this on the EuroDollar futures. This is the NASDAQ though. This is an inflationary crash, an inflationary pullback, right? This is an inflationary top. This is a deflationary crash, and this is a deflationary bottom here, right? And now we're getting another inflationary pullback move here. That's very similar to 2018, and you can see on the NASDAQ how similar it looks. Very similar. Like we pulled down, breakout on top, right? Here, let me zoom in on this and show you what it happened last time. And the volatility is higher now, so we're getting bigger moves, but the shape is quite similar. So, see, we pulled down, right, and then we broke out on top, then we had a rally, and then we crashed all the way back down again, right? And then after this breakout on top, see 1 and 2 on top, right? And then it took, whatever, almost like 2 years to get back to the bottom of the channel, and then we had a deflationary collapse, right? And then the deflationary bottom put us all the way back in the channel, and now we have another inflationary check down. So last time we broke out on top. Now I don't know if this is a second hit, but what happened on that last one? What happened on that last one is we rally almost back to this area here, and then we flipped over on top. It was a big rally and a big flip on top. So that is sort of the bear market continuation case here. That could happen. And just if we go straight into bulling here, who knows how long it would take, but back checking the channel is a dangerous spot. If we do bull, and you see that would be all-time highs on the NASDAQ, although that might not be, the NASDAQ may be weaker than like the S&P. So like here's the NASDAQ versus the S&P. So you can see the NASDAQ has been coming down in strength versus the S&P, and now it's sort of at a critical area coming up in a month or so where it needs to decide if the NASDAQ is going to go strong and continue leading the market. This would be like a bull market, longer term bull market looking thing, or if the NASDAQ is going to fail against the S&P, which means we're rotating out of the NASDAQ, out of tech and growth and blue chips, kind of, but not like the crazy speculative stuff, because a lot of that's in the IWM. But anyway, that's a look at the NASDAQ and a look at the inflationary area. And this chart I saw on Peter from Game of Trades did this, where he's like 1 minus the EuroDollar futures, so that it flips the chart upside down. And that's a lot better because it's just intuitive. Like inflation is now up, and when I say up, it's actually up on the chart. Anyways, it's not a sponsor, but it's a good technical analysis channel, and I just saw him do that. I thought it was cool. But let me zoom out a little bit on the EuroDollar futures, because I called like an inflationary breakout on this chart, and not really. I mean, this is the big inflationary top in the 80s. We don't have the run up. Like the 40s to the 80s was a big inflationary run up, and we got all the way up to like 20% interest rates, which is this area on EuroDollar futures. This is the whole Volcker thing where the interest rates were really high, right? But you can see we come down here, and we just crisscross back and forth, and every time we make a lower low, lower low, lower low, right? Yeah, and then this is the financial crisis, which put us at pretty much zero interest rates for a long time. We came back down there, right? But I said like we got an inflationary breakout here, but we really haven't. You can see there's sort of two bands on the way down. Like there's sort of the extended area where you sort of top out on inflation moves, and there's the sort of the lower band that gets a lot of action. And I've gone and compared these charts with like the S&P, but in general, moves up are sort of neutral, and sideways moves are very bullish, and down moves are bad for the market, as deflationary down moves that are usually bad. But when you first start an up move, you usually get a volatile pullback, and then it'll be a little bullish, and then you get really bullish on sideways stuff, and then the down moves are scary, the up moves are kind of neutral. So like that's how this chart relates to what's going on here. But this is the 2018 crash and sort of the sideways stuff that was going on there, right? And this was kind of a surprise, I think, that we topped out lower here and came back down to zero. I think that was a big surprise, and that's the COVID crash, this down move right here. This vertical down move is the COVID crash back to zero, and this flat bottom is the huge run up, right? And then this is just such a vertical move that we got a big check down. But now, yeah, on the EuroDollar futures, so the EuroDollar futures are the international interest rates that banks trade dollars for treasuries in the repo market. And this is really what the interest rates are, regardless of where the Fed has their rates. And I think with that 0.75 hike, I think the Fed is about at this level, and that's like sort of 1.5 interest rate area, and EuroDollars close to 3% interest rate area. And we just got sort of to an extreme, and we checked down. And so if we get a sideways thing on the top, like we did back here, that would be bullish for a while. These topping areas could get like a little bit choppy, but they're usually bullish until the downtrend is established. And it's really the move from here down to the bottom. That's the big crash. This is the .com blow-off crash. And this move from here, I mean, we started the financial crisis crash here. This was the beginning of the financial crisis crash, but it was this crash from here to here where the financial crisis just did the waterfall dump. And it actually bottomed out before we got to zero. I think the market knew that we were going to get to zero and go sideways. And it started bullying a little bit early. And then similar in COVID, the market started bullying a little bit before we got to zero. But I think this up move was a little bit of a surprise. It's a big up move, and it's all the way to this area here. So in any case, this is an inflationary topping area that we've hit repeatedly. This is the topping area on the .com bubble, and it took, months, 6 months. This is the topping area on the financial crisis. It took about the same kind of thing, 6 months or something. And so we may be in that kind of an area where we're just sort of interest rates kind of chill and they top, or we could break out and also go sideways, and then it gets tricky because we don't know. I mean, would we keep going up? That's the hyperinflation move. Do we pull back down and make a higher low here? I don't know. This is the inflation with regards to interest rates, not like the consumer prices. This is real inflation, monetary inflation. But anyway, that's the idea. So the market generally does not hate inflationary up moves. It generally is just sort of neutral, but this is just such a vertical move. It does not like vertical moves, but it really hates vertical moves to the downside. Like this, the market was bulling while it was doing this, so that's not a big deal. And yeah, and this was the COVID crash here. That is a huge deal on the way down. But anyway, that's where we are. That's where we are in terms of inflation. Yeah, I made a inflation breakout video because we broke out above this high, but this high actually isn't the topping area. We're at it now. We're at the topping area now. So it actually, to go into a high inflation environment, it really needs to break out of here. And so we'll see if that happens. Otherwise, I think it's a generic inflationary topping area where it should be a bullish thing. Like if we go sideways, we should get a ramp sort of into a topping area, which is roughly what I've been saying anyway. I'll get back to the NASDAQ, and yeah, you can see just the same kind of thing we got in 2018. Get a little inflationary move. Let's go back and look at 2018 here. The 2018 crash was here. It was a pullback coming into this area. And we got like Volmageddon in 2018 here, which was anticipating the market rolling over. But it actually bulled until we got to 2020, right? It was here. It started trending down here instead of it looked like it was going to stay in this area for a while, and that should have been bullish, but it was right around here where it started to turn over and the market freaked out, and then it did go to zero and the market dumped. Anyway, that's COVID, and this was a weird move. But anyway, that's where we are now, and this inflationary area is fine. Like, the market just likes sideways stuff. Sideways is super bullish if you're low interest rates, and sideways is also bullish wherever. If you're here, that's fine too. But yeah, anyway, that's the idea. Is we'll probably get some sideways stuff. I mean, if it did like this, that would be a catastrophe right now. Like, the market would really crash, but it probably wouldn't crash that hard until you broke down from here. Like, it could turn over and not be that bad until you start to really break down. And yeah, if we went all the way back to zero, that would be interesting. That would be interesting. And if we were able to break through and go to negative interest rates, that would be awful. But anyway, that's just kind of how the interest rates relate to the market and the best interest rate chart. So let's go look at the S&P real quick. And oh, I'm on weekly still. See, this is the cone from COVID, and this is Volmageddon 2018 COVID crash, right? And we jump on top of the COVID cone here. Let's go back to dailies. So yeah, we jumped on top of the COVID cone here and broke down, and I adjusted this red line because I think we coiled under it, and that makes this coil make sense also. Like, this thing was just sort of floating in a weird area where I couldn't figure out what it was. And this breaking down makes a whole lot more sense if it's underneath. But anyway, the bullish idea here is we want to see this thing bottoming out right here. And you want to see a rubber band ripper. And since we've already coiled underneath, if this is a false breakdown, we don't need to do any of this kind of stuff before you go. Like, we already coiled underneath. And we just sliced through the green channel line without even checking it on the way. So we don't need to even check with that line. And this is the big deal. And for the bullish case, we want to jump on top and pick up a higher floor, and then you can have an actual bullish continuation here. But as I was saying, this bullish continuation is into an interest rate topping area, I think. I mean, we'll see what the interest rates do. If we are up here doing this in the next couple of weeks, I'll obviously be checking what the interest rates are doing. And then in the bearish case, I think it is still quite likely that we rally from here, but the bears would want to see this fail, and then we head back down. And it doesn't have to be that fast. Like, we've already completed this ripping down pattern. And so for like a longer term bear market continuation, it's probably more likely to do, you know, kind of rally and take its time and blah, blah, blah. And then the double tap of death kind of maybe over here. You get like a kind of rolling sideways, sort of a distribution bull trap kind of pattern. And then you go down. Like, that's what the bearish kind of look would be. And same kind of thing. And we may hit this one, and we may not. And if you break through there, you have the bottom half of the COVID cone way below. And that's like the super end of the world, blah, 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 whole thing would be like coming way down to this area. But anyway, worry about that later. But this is kind of the distribution bull trap can run out pretty far. Like, it could run out a lot farther than that. You could get weak bullish stuff that goes just like keeps going and going and going and going, and then you like drop out. But that's like a bull trap distribution near top, and it would be a lower high and crash out of there. So anyway, that's the kind of the looks for a bearish or bullish thing is like, how vertical do we go? Do we get above the red line? If we do get above the red line, it's probably going to keep going. I mean, there's a couple of more resistance areas, but yeah, anyway, that's the thing to look out for now. And if you're counting bars, we're getting a bar today, so that the bar counts could actually complete today on an off-market thing. Yeah, and then Bitcoin is obviously trading, and it's ugly. And whoa, I don't want to do that. Here, let's look at Bitcoin real quick. And I don't know if Bitcoin is a very good indicator of anything else that's going on. Bitcoin could totally be decoupling from the normal market kind of stuff. But I just wanted to look at the area where it is, because we're on this downtrend. I started to paint this downtrend, and this was a really important area that failed. So we're definitely on this downtrend now until we break out of it. And we have a super weak bear flagging area we could do here, which would most likely fail. And then we have a much stronger bear flagging area here at very long-term support, and this would be very important. Like, breaking out of here would be like bull market looking, and failing here would be bear market looking, like longer term. And you probably cross the channel and hit it and maybe stab through it, maybe even get down here to that 6 line. Anyway, the Bitcoin chart is going to be really interesting, but this gives us like a month of trading on the stock market before Bitcoin gets in a more trouble area, or another couple of months probably before we have to sort this downtrend out on Bitcoin. And Bitcoin has been relating to the market reasonably well, so it's definitely interesting to look at. But I am not trading Bitcoin right now. I don't have any crypto trades or coins or anything. And I talk about all the time, there's legal and functional problems with BTC that will prevent it from being scalable and useful as cash, as money, because the block sizes, the Bitcoin core devs changed the protocol, they changed the block sizes where it's not scalable. And I don't know if they did that on purpose or not. Like, they didn't want it to be useful as cash, or they just didn't understand how it worked and they broke it. I'm not really sure. But you can see, if we go all the way back to 2014 here, this is a big bullish support line, and it's like an Elliott kind of 3-wave thing. And so we have our first blow off here, right, and pick it up, and then we have our second blow off in the 2017 top. And this is the similar, just the wedge pattern. You get these downtrends on Bitcoin, and when they fail, you cross over to the other side and you tap it once or twice, right, and then you break out. And so that's what I've been looking at the last month or so on Bitcoin, is you pick up this downtrend, you fail, maybe stab through it. That was COVID, and that was a deflationary crash through the bottom. Right here, we just picked the bottom up and didn't really crash through it. And yeah, so depending on what we get on the interest rate charts, we may be doing an inflationary topping area here, but if we happen to be getting a deflationary move on interest rates and failing here on Bitcoin at the same time, you could see this thing stab through. That's just like one thing to watch out for. Or if we get an inflationary breakout and it starts going sideways, and you see Bitcoin breaking out this way, that could be pretty bullish, and it could be bullish for a long time if we get that interest rate breakout. We'll just have to see kind of what we get. But the generic call, I think, right now is just, watch out for this. I don't think that we're crashing like straight down across the whole thing right now. Maybe we do. I don't know. I mean, that's the super bearish thing, which is what everyone is saying right now. Like, everyone's 100% in on the bearish scenario, right? So, I mean, that would just be slice this thing and just come straight down here, right? Maybe stab through it a little bit. But the only problem that I have with that move is that we're at an inflationary top. You don't usually do a deflationary contraction looking, collapse to the downside when you're in the middle of an inflationary topping area. You tend to do that on the way down towards a deflationary area, right? So that doesn't really line up with what I think is happening here. But I think this NASDAQ chart just paints it pretty well. Like, you understand that we're in an inflationary topping area, and you get an inflationary pullback before an inflationary bull run, right? The inflation pullbacks are usually minimal, and then you just get like a kind of weak bull run after that. And then the deflationary pullbacks are super aggressive, and you get a more aggressive bull run after that. So yeah, it should be a more muted pullback and a more muted kind of bull run, depending on what we get on the rates. But anyway, that's what's moving today. Just kind of wanted to check in and look at where inflation actually is, and that's where it is. That's where it is right now. And the upside down euro-dollar future chart is the one to look at for actual monetary inflation. And so, yeah, I mean, pretty much you can just ignore anything that the Fed says. Like, the Fed is just guessing where this chart is going to trade. And the Fed and all of their bank reserves that they print, the bank reserves only matter to U.S. banks. Like, the majority of dollars on Earth are not created by U.S. banks, and they don't care about Fed bank reserves. They trade treasuries in the repo market, and that's what this chart is telling you, is the interest rate at which all the international banks are trading around dollars, right? So this is the real world dollar interest rate chart, and the Fed totally follows this thing like clockwork, like the whole time, and they don't control it. Like, the Fed is not controlling the international, repo bond trading stuff. So anyway, that's where we are. And yeah, and so you get an inflationary check back. Usually it's just right here when you start to turn up, you get like the volatile pullback, and then you usually get neutral or bullish activity as you're going up. But this thing was just so freaking vertical that the market did not like that. But even if you get more inflationary moves, as long as they're not vertical, if it's just kind of going up like sideways-ish, that should still be bullish. I mean, I doubt we're gonna get like more vertical rips on this thing. Like, this is big time resistance, as I was showing you on the last. Oh, if you go out to the weekly chart, it's a lot easier to see. But this is big time resistance area where we are now, and it has been for the last 40 years. We've had this trend where that's an extreme topping area. And then you usually get some kind of sideways activity around here, like around the topping areas. And this is usually bullish until we roll out of here. It's like a semi-bullish topping area. And it can ramp, like if you start going sideways, you can get a ramp up to the top. Like this dot-com bubble didn't really ramp up, but this sideways move on the financial crisis, it ramped up, and then it started to crash down. And then for COVID, it was a weird one. Yeah, that's just a weird one. And it went back to zero. So yeah, I guess that would be my call. I don't know. It doesn't really matter what I would try to call. Just showing where we are right now is important. But I would expect some kind of sideways stuff in this general area, and that should be bullish until we break down out of here. And then we'll see if we make a higher low or not. We might go back all the way to 0. I don't know. We could go negative. That's still a possibility. But I think the general inflationary thing would just be to make a higher low. Would signal that we are kind of bottoming and maybe going into a more inflationary long-term trend, which changes some of the market dynamics a bit, and it makes the stock market less interesting as we get away from these lower interest rates. But anyway, that's where we are at the moment. Oh, oil. Yeah, I can look at oil and gold and stuff. Oil did a... I should probably do like a whole video on oil. Let's go to dailies. The oil chart is so dumb when you put on auto, because that spike where it went down just like smushes the chart. It's ridiculous. This is a big long run on oil, and this area up here at about 140 or something is the previous sort of oil top that we got in the 2000s. Like the .com blow off, oil was way up here. It was expensive, and all the oil companies were trying to do fracking. There was a ton of oil exploration and like oil fracking that was going on the last time the oil prices were up here. And interestingly, nobody's doing that now. There's no frenzy to do fracking or oil exploration or anything like that right now, which makes me think that the oil companies don't buy this oil price. Like, they don't think this is going to stay up here. Or else they would be, you know, if you're above 60, all of the kind of fracking and everything like that is profitable, and none of it's going on. Like all the alternative oil sources, like deeper oil wells and like new equipment, like all of that stuff becomes profitable above 60, and we're above 60 and nobody's doing it, which is like, what's going on? Why not? Because we might be coming right back down to where it's not profitable and they don't want to invest in any of that stuff right now. Possibly. But anyway, this is the move on oil that we're getting. We're getting a pullback and we're testing our trend line. So, you know, we kind of popped out sideways here around 60. It loves this area around 60. It's an area that it always hangs out at. It tests it out thoroughly anytime we're going up around 60. But you can see we jumped back on top of the uptrend, and for now we're still above it. So we'll see if this holds. If that does hold there, then we'll probably run up here. We'll probably run up here into the 140 area, and we'll probably be getting divergences and stuff like that. We can worry about that later, but if we do hold, I mean, this 140 is a big area to watch out for. But if we break down here, 60 is the immediate downside target. It doesn't have to crash like super fast. But yeah, anyway, the oil is a big deal because a lot of the price, what people are calling like price inflation, just prices of stuff being high, has a lot to do with oil prices being high right now. But if we have oil come down and we also have a huge oversupply of stuff, like that's going to all be lower prices. We have an oversupply of junk and then cheaper junk coming behind it. And so that should bring prices of just random stuff down. But as I was saying, like the prices of things is different than inflation. Inflation is how many dollars are being created into the system, or when you pay loans off, it destroys the dollars out of the system. And the interest rates really tell you if money's being created or destroyed. On the way down, dollars are being destroyed out of the system. On the way up, they're being loaned into the system. And so we just had a ton of new money come into the system. And now we'll have to see what happens. And then in terms of if the money is going into stocks or not, the IWM is a really good chart to look at, because this has a bunch of the high risk stuff and also has financials. And so like if banks are loaning money into, giving like loans to hedge funds to put into the stock market, the IWM tends to like lead and pick up, and it's been doing that. The IWM has been sort of leading the moves here and holding up stronger than the NASDAQ and the S&P. And yeah, similarly, if the IWM needs to slingshot up here above this zone, while the S&P jumps on top of this area. Like that's where you get like a bullish continuation move on both of these charts. And that would indicate money being loaned into the market. And then at the same time, you want to see these interest rates going sideways. Just sideways stuff is good for the market. If you see this thing like pull down and like crash on the interest rates on the Eurodollar futures, and you see, these charts not make it to those levels, then that would start looking bearish. I'd probably just like roll over and stay below. If we roll over and stay below this line, then it's just a matter of like how far can it run before it fails. So anyway, those are the looks. I'm getting kind of long-winded on it now, but this is not investment advice. As always, just kind of looking at possibilities and looking at the interest rates and the zones where we are and possible moves. And I mean, we're coiling underneath the yellow line. Like, I'm not even pointing out the possibility that we just collapse from here. But the reason I'm not pointing that out as something that I think is likely is because we just had an interest rate up move, which doesn't tend to result in giant collapses. Like, the collapses happen later. That's not when collapses happen. Collapses happen after you finish the stopping process, after you get down back through here, and then you get the down move. This is where the market collapses on this down move. We're not near that. We're not near that deflationary area right now. We're in the middle of an inflationary kind of topping area, so that's why I think the market probably stabilizes a little bit, and we'll see how strong it looks and like what everything looks like. The next couple of weeks should be pretty interesting. And well, I'm positioned for the bullish case. Like, I think we're gonna jump on top of this thing and we're gonna start bulling, just for the time being. But I think that we are in a topping area that can blow off, similar to like the .com bubble or something. So I think that we'll make higher highs on the NASDAQ and the S&P. I still think that's probably the likely case. But if we do, if we rally and roll over weak, that's not going to look very good. That's going to look like a bearish kind of thing. But anyway, those are the kind of moves. So happy trading. Cheers.